Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup. So you saw a little boost in the equity markets there. A little bit of a sell-off. That was on this headline about Tencent. U.S. explores restricting Ant Group, Tencent payment systems. That's a Chinese multinational conglomerate. I forget what all companies they own, but I think they do the payment systems for Alibaba, stuff like that. So, it's obviously the equity markets at first, you can see the little, blip down and then kind of bounce back. You got to be a little careful because that's, it's probably going to affect more NASDAQ than anything. Let me pull up the NASDAQ here. NASDAQ, came off and then rallied back. But that was what we just saw. I mean, you just saw that little move in equities. So let's talk about the markets. The markets are, I'm going to go just to the S&P here. I'm going to sit here and talk a little bit about it. So, the S&Ps are, or the market basically is kind of at a, what do we do now kind of situation. You've got the stimulus talks, which is obviously Donald Trump pulled the plug on him yesterday, probably panicked after the market sold off. It's like, I gotta revive him a little bit, and some people would argue and say, well, no, that's part of his master plan. It's a negotiating tactic. Whether that's his tactic or whether, stocks sold off and he goes, oh my God, I better, do something about this. It's up for debate because you'll never know and I'll never know. So, but the fact of the matter is he wants to go back and basically negotiate at least some of the stimulus. And I think the takeaway here is, and the Democrats are going to play hardball. Because they can. They're in the power position, I guess. And remember, this is all dealing with stimulus, which really, the ones that are going to suffer are the people, are those of us in the United States, ultimately. But it's politics, so it's kind of what we're all dealing with. But I think what the market is facing and what the market is looking at right now is, hey, we're going to get kind of a skinny deal, piecemeal deal. It's not going to be as big as we want, but we're still getting some stimulus ahead of the election, which is keeping the markets bid. The flip side of that is, we're not going to get this big sweeping package. That's probably not going to happen. So the markets for right now are liking the fact that we're getting some stimulus. As you can see, the S&Ps are back to where we were yesterday. But is it, whatever we get, is it going to be enough? And does that just really solidify the resistance here around the 3,400 level in the S&P? I mean, that's kind of the way I look at it right now. But there's a few other things that have my attention that I think we need to discuss. And Jason said, hey, Blake, the key is McConnell, which he's showing no interest in doing anything. And that's true. He really isn't. And if you take Mitch McConnell, he's the old school Republican, right? From the old guard, if you will. And I'm not going to go further than that. But what I'll say is, he comes from the school of thought as, we're Republicans, we are going to be more fiscally conservative, and we just can't swallow that big of a, whatever the ask is from the Democrats. So, I think you're right, Jason, is, between Mitch McConnell and then you got Nancy Pelosi, who's trying to play hardball too, and they're pretty far apart. And so I guess, will we get some stimulus that helps the airline industry? Will we get, some of the PPP get, diverted into individual checks for the people? I mean, I don't know. I just don't know. But right now the market likes it. And I think we just have to acknowledge the fact that we're up against resistance once again. And we might, struggle up here. And Amira says S&P has a head and shoulder. I don't know if I would call that a head and shoulder pattern, but you know, it's not pretty. Yeah, I guess we could, you know, I'm going to look at a different chart here. Guess maybe, you know, here's the thing. If I look at a chart and I have to cock my head sideways and say, well, you know, it might be, then it probably isn't. You know, that's a, oh, and he said an inverse head and shoulder. Okay. So let's talk about that for a second. I loathe, hold on one second. I got a phone call. Hold on. Okay. So I loathe head and shoulder patterns when people, well, Amir, I'm not going to harass you about this, but I do not like head and shoulder patterns as continuation patterns. I won't trade them. I just won't. The reason why is because the targets will never be reached or very rarely reached. So what you're looking at here is this, right? There's resistance. Let's delete some of this stuff. I'm just going to draw it out. Okay. You're looking at it like this, right? Now, typically with a head and shoulder pattern, remember, head and shoulder patterns are reversal patterns. They're not continuation patterns. In this case, trend is higher. This would be a continuation, you know. Now, the school of thought would be head and shoulder pattern, head to neck, that'll take us to new highs, right? Now, I'm not saying that that can't happen, but the chances of us reaching here are very slim. Now, I would say that this is a breakout and a lot of people get sucked into this, but you know what I would be doing? I'd be looking for a fib level to fade right up here. That's what I would do. Catch everybody wrong-footed, catch everybody, you know, trying to play some inverted head and shoulder pattern that's a continuation pattern, which isn't, and then short it, you know, at a retracement, maybe even at the 618, just enough to get people in, and then watch it get slammed down. So I don't play head and shoulder patterns as continuation patterns, is basically what I'm trying to point out here. I only trade them as reversal patterns. I hope that makes sense. Because what I've seen over 20 some odd years, 25 years of doing charts is that as a continuation pattern, the chances of them completing are very, very small. But not saying that we can't, you know, get a rally here, because it can for sure. I'm just saying that you won't catch me playing it. Okay. Again, let me reiterate. A head and shoulder pattern or an inverse head and shoulder pattern is a reversal pattern, not a continuation pattern. I hope that made sense. Okay. Anyway, let's scratch the technicals for a second. Let's talk about the markets. We'll talk about something else, actually, something that also is on my mind. Let's take a look at the 10-year. So we have this move developing in the 10-year. And this is a big move, because if you look at what we've been doing, this consolidation, we finally broke down, right? So a breakdown in bonds is a rally in yield. So if you look at the 10-year yield, you can see the 10-year yield has broken a triangle. It's broken higher. So if the 10-year, and actually I got to do this, I need to set an alarm there. If the 10-year yield continues to break out, it will be very difficult for the dollar to really sell off. Now, you know, when you go, well, which dollar? You know, is it the euro, or is it the, you know, Aussie, or is it, you know, to me, it's going to be more of the dollar yen. That's going to be the one that I'll be watching. And that's why, if, you know, as a ForexAnalytix subscriber, you probably saw a new pattern in play. That's because the dollar yen broke. Have you guys ever seen have you ever seen the Key and Peele, the Balake? You know, because people always make fun of me, and they don't make fun of me. They kind of like make fun of my name, and they say Balake. You guys ever seen that? It's hilarious. It's the one of the funniest things. Anyway, when I say the reason why I say that is because when I say it broke. Aaron, that's right, Tony. Balake. All right. Anyway, so when the dollar yen broke 108 and a quarter, or 108, 108.85, 105.85. Jeez, when it broke 105.85, this is a bullish breakout. So with yields rallying, with bonds selling off, I believe that this dollar yen will now play higher. Remember, we had a false breakdown. It was my chart of the day, like what, last week maybe. I put in a pattern in play, and I'm trying to buy the dollar yen. I've got bids below where the current market is trading to try to get into the dollar yen. So just so you guys know, that's what I'm trying to do. I am still playing the dollar Canadian on the long side. I'm a little bummed out that we have this. And here's another example of an inverted head and shoulder pattern. You know, somebody pointed that out earlier. It might, but I'm not playing it as that. I'm playing it more as the bigger. See, this is an inverted head and shoulder pattern reversal. Inverted head and shoulder pattern, respect of the neckline. We break above this. This is more of a, and you can probably see it like this. It's more of a bull flag pattern. That's the way I'm going to view it. Oops. If we can break, if we can break the 133.50 level, that would be really bullish in my view. Anyway, but we'll see. It's got to hold. And I feel a little awkward playing dollar Canadian long and then trying to play dollar yen long, because typically they're going to move opposite of each other regarding risk. But the dollar Canadian's held up where it needs to hold. I know now for sure, if we break below 132.40, it's over. The dollar Canadian, this trade is over. I'll have to go back to the drawing board. But the dollar yen is definitely a new trade that's on my radar now, because of what's happening in the bond market. And that leads me to believe, again, going back to the S&Ps, I'm not bearish here. I'm not. I have to acknowledge the fact that the market obviously likes whatever we're getting. Do I think the equity markets can still move higher? I do. Do I think it's going to? Well, we'll see, because this is all headline driven. The whole market's headline driven, so it's hard for me to say I'm definitively bullish, and then something happens, some tweet or something happens, and the market sells off 3%. Well, I'm not even looking, like it did yesterday. So I think it's acting constructive. And I do think that a breakout above 34 and a quarter, which is this 38 or the 618, and whether or not you're saying, oh, it's a big inverted head and shoulder pattern or whatever however you're looking at, I do think that this fib level, a break above here, will target 50, 60 S&P points higher, something like that. And if that happens, what is a currency that would move with that? In my opinion, it would be at least the dollar yen. The dollar Canadian may go down, but the dollar yen would probably go up. So I'm kind of hedging my dollar bets by trying to get long some dollar yen alongside being long dollar Canadian, if that makes any sense. All right, and a couple other things. One other thing I should recognize. Man, this Kiwi, heavy. I mean, it is. I mean, this is a bear flag pattern right now. I mean, you could. I would put in another pattern in play on a bear flag pattern on the Kiwi, but we're so dollar heavy right now for bullish. Whether you're looking at a breakdown here, you got the inverted head and shoulder pattern in the dollar Canadian, or the bigger longer term one rather. The euro is still struggling at 118. The dollar index is holding its inverted head and shoulder pattern, or whatever. It's still holding up well. So I don't need to add to that fuel, but you can see that the dollar actually looks pretty constructive against a lot of different currencies. If you are going to ask me about the cable, I'll tell you the exact same thing that I said earlier today. I'm not even dealing with it, because it's all Brexit related, and it's definitely doing its own thing. I'm not even trying to figure that one out. So guys, I want to say, if you are ForexAnalytix subscribers, which you guys are listening to me live, thank you so much for your support. For those people that are not, that are just listening to this after the fact, make sure you try it out. It's only $1 for 10 days. And I want to thank you guys for all your support, as always. All right, guys, have a great one. Thanks, Brock, Tony, Amira, Jason, everybody else that's listening, and thank you.